viewers, let's move on and talk to the management of the hour, that's KEI Industries. On the back of their Q2 numbers, the stock has taken a hit of about 5%, but the Q2 numbers are looking healthy. Let's understand what the reason behind this fall is. It's on the back of slightly weaker first half performance coming in, although Q2 looks good. So let's interact with Mr. Anil Gupta, the CMD of KEI Industries. And Mr. Gupta, morning. Thanks so much for your time. Now, while Q2, it's been a strong quarter for you. Help us understand what went right this quarter, because on one hand we see good numbers coming in on the top line, but your margins are at about 9.9% versus your earlier guided figure of 10.5 to 11%. Of course, this is our internal calculation, but any outlook on this front?
We, according to our calculation, our EBITDA is still 11% plus, because I think you eliminate exchange rate fluctuations and other income, etc., from the EBITDA, but we always include it. Anyway, it's up to you how you calculate, but EBITDA is slightly lower because you know that there has been a substantial fluctuation in the commodity prices, maybe around 0.3 to 0.4% lower. We will definitely make it up in the full year. Growth is as per the guided level, and we have been able to grow our wire and cable business by around 22%. But overall, as a Q2 growth is 19.36% because lower revenues from the EPC business.
All right. Morning, Mr. Gupta. This is Shrishti also joining in while you helped us understand what impacted your margins this time around. But overall, the H1 was a little slower versus what the street was estimating. But help us with the overall outlook for FY26. What will that be?
Full year guidance had been 17 to 18% growth. In first half, in 6 months period, we have grown by around 22.5% overall in 6 months as a revenue. So we are more than what we guided initially, and our volume growth in our wire and cable business is more than 15% in terms of volumes. We are on track.
Sala, let's keep the conversation going with Mr. Anil Gupta of KEI Industries. And Mr. Gupta, thank you so much for staying on with us. Really appreciate that. And let's talk about your commodity pricing outlook, Mr. Gupta. Copper prices have been on a steady surge. Help us understand how that is impacting your commodity costs, and hence, if you are going to be making any changes to the pricing strategy.
In retail, we are reviewing and correcting our prices with respect to commodity within every 15 days. So far as projects are concerned, every project when it is quoted, it is based on the prevalent prices of copper and aluminium, and we are keeping adequate safety margin and price variation clauses up to the order maturity. And once the order maturity takes place, we are covering our purchases of copper and aluminium vis-a-vis our order book. So we have never lost on fluctuations in the copper or aluminium prices.
All right, but along with that, Mr. Gupta, specifically with respect to your EPC segment, the first half of FY26 revenues were seen at 108 crores versus 211 crores in the first half of FY25. So a bit of a drop there. Help us understand why the slowdown and what's the outlook going ahead?
See, our EPC is only a marginal business for us. In 5 years back, we had stated that we have taken a policy decision to cut down on the EPC business gradually, and that this reduction is in line with that policy. So we have not booked any new orders in EPC in last 1 year, and the new order addition in EPC every year is around 300 to 400 crore only. So it is absolutely in line with our policy.
Okay, and while we're talking about your order book on the EPC front, if you could just throw some light on your overall order book, the latest figure, and any visibility that you have on that front.
Presently, as on 30th September, our order book has been 3,800 crore, and out of which more than 700 crore are export orders and around 2,300 crore domestic orders, and rest are EPC orders. Uh, in our business where we are executing most of the orders maximum within 3 to 4 months, order book really does not matter, because order book is more denoted by when it is long-term EPC contracts. So hence our order book will always look like 3,800 to 4,000 or to maximum 5,000 crore, not more than that.
All right, but what's the visibility here, Mr. Gupta? The latest visibility on the order book, how is it looking like?
Our exports in this quarter are around 18% of our total quarterly revenue. And we expect that full year revenue from exports will be to that extent only, around 18%. And year after next financial year or year after year, we will try to grow it to 25% to 30% as our new capacities comes up. Because we have developed substantial export markets for our product.
Okay, so that's the take coming in on what is the outlook coming in for the business. But with that, Mr. Gupta, thank you so much for joining us.